Hello, traders. It is Friday. Happy Friday to you, and happy Quad Witching Friday at that. It is the 18th of December today, 8:02 a.m. Chicago time. On episode number 1902, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. We're going to pop right in and look at our summary sheet this morning, the Convergent Trading pre-market summary sheet, and see what the market has in store for us. Hopefully you can hear me loud and clear. This morning we have basically a market that has pushed highs, new all-time highs, on several products, pretty much across the board on the indices, but overall has pulled back into a neutral position. Coming into today, we have the S&P having traded about 140,000 contracts and having pushed 24 points basically. The overnight inventory is at negative 19% on a double distribution profile. It is quite tame this morning as we come in here. We're not really seeing a move in any markets. I mean, today's expiration Friday, a lot of the action is going to be predicated on hedging open positions, hedging delta on calls or puts that are out there. And so that's where we stand. I'm expecting this to be a relatively quiet day. It is the last day of the year where we have a full trading day before the holidays next week. Remember, Monday, Tuesday, Wednesday are normal next week. Thursday, Friday are not. And in the following week, it is the same. There are some stats that I wanted to cover actually with you relating to the last 2 weeks of the year. I took the low and the high of the last 2 weeks, and there have been some really strong moves that have occurred over the last 5 years. It's a very small sample set, but it's the most relevant. And what we come up with is over the 2-week period, the S&P from low to high covered 3.9% on average. Don't really believe in averages, but it describes how much there is. There was in 2018, the S&P moved about 13%, 13.9%, I believe, from low to high in the last 2 weeks of December of 2018. Generally, we've had a positive push, a rally into the end of the year. We've been rallying into new all-time highs here. This year setting up to be very, very similar to those prior years, 2019, 2018. The same in the NASDAQ. The NASDAQ's much more muted. The average return there is about 2.8%. Again, past performance is not necessarily indicative of future results, but I thought I'd share that with you. It's pretty interesting stuff. There were several releases this morning. German IFO business climate. Expectations came in strong and had us moving, spiking up to in the S&Ps at 37.23, the high. We do have Fed's Evans at 11 Eastern, Fed's Brainard at 11:10, and the Fed Bank stress test results the second round today at 4:30. Nike earnings. But a pretty muted day, and the biggest thing to be aware of is that we've got quad witching. So that's where we stand this morning. Let's take a look at what we expected yesterday. Yesterday, we did end up rallying up after the open in the overnight session. We came into the session with a gap up, but I had warned that it is very likely to be a pretty sideways kind of a day, with the primary expectation being a pullback. Scenario one was a pullback to 37.02 right here, and then a push. I did expect the high to be taken for the overnight stat, but overall expected a pullback to the 37.02 or so, and then which was last week's high, which is around the prior session high and the mid of the session, the full session mid. Expected a pullback to there, a consolidation above the 37.17. I expected it to fall back and sit in the middle. Uh, and sit in the middle as we close the session. That's the primary scenario. The secondary is a push higher, and then we float back into the prior range down into 93. That did not happen. The third scenario is a market that's exhausted on the buy side, which I'm seeing signs of, and then it pushes down and squeezes all the way to 36.72, initiating or ending the one-time framing up on the daily. And initiating a chance to sell a little bit for the next run up. Here's what actually happened. There it is. It went up to 37.17. The overnight high was 37.1750, missed it by 2 ticks. The overnight stat remained open for the entire session. The overnight low yesterday was 36.92. We pushed to 37.17. And then pushed right back into 37.02. We took out the 0450. We pushed to 37.02. That's again the prior week's high, and then sat in the middle. So scenario one was almost spot on, except it did not take out the overnight high. But I expected some responsive selling coming into the session. Some responsive selling coming into the session, and as a result of how the market was set up. If you recall yesterday, the overnight inventory was 97%. 97% today. It's only negative 19%. The overnight inventory short 19% of the volume. So the pullback. This pullback was completely anticipated, and I was looking forward to test that 37.0450, 37.02, and hold sideways, and that's what it did. Not a huge fan of the kind of action that we had yesterday. It really was a sort of a normal distribution profile with weird triple prong kind of action there. That looks like Batman peeking in sideways from the side of the screen, but. Overall, we did not squeeze into the 37.19 or 37.22 measured moves up here, but we did so overnight in this session. We can start leaning on volume. We could start leaning on the delta and reading the order flow normally, starting with today. Pretty much the roll is done and we are complete, and at 8:30 Central, expiration had already occurred, but people have until the end of the session today to hedge their positions before delivery on those options. So that's where that stands. Here we are, 144,000 contracts traded in the overnight session. Again, about 24 points of range. You could see how the auction's been proceeding. We've been, we've pushed highs, we've consolidated, and then we poked higher, and we've been pushing higher from there. The overall thing that I'm seeing here is there's no rejection. There's no rejection of these highs. It's not pushing into the high and finding an excess and coming off. It's pushing to the high and flagging like we saw in yesterday's session here. We just, continue to push the high and flag up here. We're not really pulling off or pulling away. So to me, this says it's not likely to be done. But as we poke our heads and look higher, we managed to get to this measured move today, the 37.22 quarter. We went to 37.23. You start to see that these measured moves start to compress into each other. I'm expecting this area here to present some resistance. These are overlapping measured moves from the past, from the recent swings, and I'm looking for these to kind of set up some resistance. This market was kind of free to push through up into this 23 area that we got overnight. This whole block here gives us some some resistance overhead on a projected basis. I don't lean on these numbers so much because they don't represent an auction price. It's just a fib. But you know, this area here is likely to show some exhaustion coming into next week. Okay, so that's where we are. The delta is positive on the session despite the negative inventory, and that's where we stand. Now, I want to take a moment, as we do every other Friday, and post this. I know there's a lot to cover today. Uh, I find this fun. I really like to go back and read through the chat and see where everybody's from. Please take a moment and tell us where you're located. Type in your city, state, and country. You can do so in the live chat on YouTube. You can do so on Periscope, the chat on Periscope if you want. If you're logged in, if you're not, that's fine. If you want to tweet about it, that's great. But let everybody know where you are. Hopefully some people can connect. I would much more urge you to share a public profile than emails or anything like that. If you see someone you want to connect with, you just have to add them in the chat and add some public profile like your Twitter, Instagram, things like that, and hopefully we can get you connected together. Okay, so take a moment to do that. The second thing I wanted to chat about today is something I talked about yesterday. This is the fireside chat that is taking place next Wednesday at 6 p.m. Eastern, 5 Central, with Convergence head traders. This is a casual discussion with these head traders, and we'll talk about their journey, experience. This is not a technical discussion, so to speak. This is about the business of trading. These guys have been in it for some time. This is taking place, again, next Wednesday evening, eve of Christmas Eve, December 23rd at 6 p.m. You can register for this by going to ct.pro/CT Fireside 2020. This is hosted by Convergent Trading, the other entity that I've founded that's focused on trader development. So please join us there. Hit us up if you want the link. It is in the description of the YouTube video. You can go back and pull up the description or scroll down and catch it. If you're on the Edge Clear page watching the this Trader Bite, you can scroll up, and on the header you'll see this image, and all you have to do is click on the image and you'll be able to register. Okay, there are quite a few registrations already that have already taken place, but there's a lot of room left. I'm actually surprised at the number of people have signed up. Let's take a look at what one last thing actually on the review that I did not want to skip today is to keep you rooted in what the market is doing. And I want to discuss with you one of the reasons, another reason why I'm anticipating that this move up is likely coming into resistance. This is the daily composite chart, RTH only. Each one of these bars represents one pit session starting at 8:30 Central, 3:15 Eastern, 9:30 Central, 9:30 Eastern to 4:15 Eastern. And this follows the pit session, or which follows on to the cash session, plus 15 minutes to close out the last bracket. Look at how it's been proceeding again on a weekly basis. Higher low, higher low, higher low, higher low, higher low. This was a threat on Monday to take out the higher low of last week, and I talked about that on Tuesday. But look at what we've done for the week. We have 3 distinct distributions this week. We have tested and held this 85.75 and pushed through it 2 days ago and have moved away yesterday. Look at the point of control of the week. The point of control is chasing price, and this has an effect of causing another push up most likely, but it's also trapping price. Remember, volume does not occur in futures unless there's a seller to every buyer. There's no such thing as a contract, too many sellers, too many buyers. The market doesn't rally because there are too many buyers. That does not work. We have a seller for every buyer. The market moves up because the buyer's more aggressive with price than the seller is. So with that being said, price is being trapped up here. Yesterday had a doji for the day. We really opened and closed at the same price, and today we're on the upper end of that doji. But this is giving us signs of exhaustion here, with the point of control trapping some of this action. Somebody's likely to be liable to be wrong, but overall, this is another indication of why I believe that the rally temporarily, for now, is starting to stall out. Let's take a look at what's expected for today. Here we go. So the overnight point of control, you can see there are two distributions here. The overnight point of control is where prices were holding above VWAP. We're holding above yesterday's value, and we're trading on the edge of yesterday's range in this 17 area. Remember, yesterday's high was 37.17 in the pit session, and yesterday's high in the extended hours is right here at 37.17 and a half. We are really snaking around this overnight point of control. Expect chop here. The overnight balance is really, again, I told you it was at negative 19%. It's really not, it's not excessive one way or another. We're starting to make a push here, some pretty decent lifting, but overall, I'm expecting this to chop around and squeeze this 23 and start working its way towards the 27 this morning before it comes back to the overnight point of control and starts to hold steady near the upper end of the range today. So again, I'm looking for this high to be taken out, and then for it to take a break and rest up here. Again, there are signs that this thing is running into some exhaustion based on the price action in the auction. The secondary is a push higher on the open that's confronted with some selling, and then we pull back to yesterday's value and point of control. The value area is the value area for yesterday is between 37.13 and 37.07, and I expect that we are likely to hold this steady, and then I'm looking for it to push into the lower distribution of the overnight and the lower edge of yesterday's range, and then to hold steady here as well. I'm expecting this to be a muted session. Like I said, it's quad witching Friday. Do not have huge expectations, temper your expectations. The big areas to watch, in my opinion, are the 27 up here, the 27, and then there's a heavy cluster between 31, so 31 and 34, which brings us to the volatility sigma range for the close, but 27 is key here. Otherwise, we're looking at 07 below, 04, 7, 4, 02. That was the high last week, and you know, if it does not hold this this 02, then the one-time framing up comes to an end, and we may see some a quick move down into the 90s, specifically 96 and 92 down here. So that's what I'm looking at for today. Again, quad witching Friday, good day to be reserved in the risk that you take. And remember, today and every day, it's not about avoiding losses. It's about getting the maximum return for your loss, right? The R factors are really, really important. And our goal is to find trades or wait for trades that give us a good return for the risk that we're going to pay for. Good luck. Hopefully you gained something today. And if you have not done so, please let us know where you are so that others can see and connect with you, hopefully. I know this is a feeble attempt. There's probably a better way to do this, but here you are. Good luck. I'll catch you soon. Take care.